Afternoon and good evening. I'm Keesa Schreane. While process automation and the importance of data have been in focus for the past several years, 2020 further catalyzed the importance of these technology-driven elements, reshaping expectations for market change going forward. Electronic trading, regulatory change, cost reduction through tech efficiency, and easing the integration of disparate technologies will be at the forefront for years to come while impacting different markets in different ways. And that's exactly what we're going to talk about today, these impacts. Returning with us today is Kevin McPartland, Head of Research, Market Structure, and Technology at Coalition Greenwich, and Paul Palackel, Head of Buy-Side Order Management Solutions at the London Stock Exchange Group. Thank you both for joining.
Thanks so much for having me.
So, I know
Kevin,
it's been some time since we last spoke, and companies are starting to talk about a more hybrid working model for trading desks. What are the conversations being had with your customers around automation and data and execution management in our new environment?
Yeah, it's been an absolutely incredible 18 months. It goes without saying. And I think we talked about this when I was last on, right? We've seen, as much change in the last year as we maybe expected that we would have seen over the next 5. It's really just incredible. A lot of things that we never thought would happen have happened. The fact that institutional trading desks were able to operate remotely, again, incredible. Although I think we're increasingly starting to see that the ability to operate in a hybrid environment might actually be more complicated than everybody being home. It's just so new, it's uncharted territory. So with that, talking about automation, I think the story over the last year and increasingly going forward, trading, sure, a big part of the conversation, but really it's an end-to-end story, right? It's everything from pre-trade analytics and data, the trading process, of course, and then also post-trade clearing, settlement, reconciliations, the whole operational process. The more of that process that can be automated and streamlined, the better, because even if the trading desk, for instance, is back, perhaps the operations team is not, or the operations team is in a different offshore location, also something increasingly common. So the more the process can be automated, the better. And I think, in the past, we always would think electronic trading, that only works for liquid markets. But, the other thing that we've learned is there's so much interesting new technology out there and new solutions to help with trading in less liquid over-the-counter markets, that there really is a technology solution to help streamline pre-trade, at-trade, and post-trade market infrastructures, really for every product and asset class. It's just the level of automation and where the technology matters most is what's different. So what you need in a market for U.S. government bonds or futures or equities looks very different than the market infrastructure you need for trading loans or mortgage-backed securities. But the latter still has an opportunity to evolve and electronify and automate from where it is now tremendously, I think, over the next couple of years.
So great point. Different types of market infrastructure and technologies needed for different sorts of asset classes. And also love the point about different people having different sort of work scenarios. So we have the pre-trade, trade, and then the post-trade, and automation can really help support having a seamless flow when you have these different types of work scenarios. Cloud comes to mind when we talk about that, right? Paul, I know there's an increased focus on cloud. And how do you see this evolving for traders in the context of what Kevin just mentioned?
Yeah, absolutely. So, just to add to what Kevin said, one of the interesting elements from sort of the human side of sort of this increased remote work is, I'm sure we've all read articles about the separation between home versus office. When you're in a home office, one of the interesting things that, comes about when teams start to be remote is the actual hours, their workday hours start stretching, right? So from having everyone you're located in, say, just the East Coast, you now have people in the Midwest or even the West Coast, which is, interesting, even from a customer support perspective. How do you continue to support your clients when it's actually 9 p.m. Eastern time, but they're still at work? Cloud has been central to this. If you read one of Kevin's recent reports, how cloud is a dominant technology within the order management solution space. So, Refinitiv's cloud management solution cloud order management solution has had a huge year last year. I think just the perception of cloud in general, just over the last few years, has dramatically changed increased views of it's secure, it's resilient. You have, it's built for remote access. And even there's just better, the leading providers have better user-friendly tools there. So I think cloud has been a game changer and frankly continues to support the growth of sort of remote activity. And it's mainstream, right? So I think if you're on a cloud platform, like you continue to see accelerated growth and opportunities. If you're not and you're sort of a client, I'm sure at this point, 2020 really made you look pretty hard at your systems and consider, it's going to be hard to scale up if I'm not on a cloud system. It's going to be hard to upgrade my systems if it's all deployed in the office. So those were some hard questions, some of our clients had to ask. And others, new launch funds, enjoyed the success of having a remote environment, lighter footprint, and the ability to be more nimble. So I think that was key to success in 2020.
Great. Also, I'd like to remind our audience that they can feel free to participate, join in the chat, and ask questions. But right now, I'd love to hear, Kevin, would you like to add to that? I mean, lighter footprint, the need to scale up. What types of things are you seeing in this play?
Yeah, I mean, cloud computing is one of the biggest things we talk about today. Clearly not a new technology, but the capabilities of cloud computing today are just dramatically different than what they were 5-10 years ago. There's so much more you can do. There's so much more access to compute power, to storage, even just the speed of sort of the connectivity to those cloud environments has made things possible that weren't before. We've seen real talk of matching engines in the cloud, right? Which a few years ago seemed impossible. How could that possibly be fast enough to work? And it is working. And Paul mentioned the research that we put out just a month or so ago. And hedge funds, it looks like, are really leading the charge and demanding portfolio, order, execution management systems, all cloud deployed. And again, as you both mentioned, right, really driven home over the last year. The idea of trying to get locally installed software set up to run at home became a bit of a nightmare for some folks. Whereas if you were cloud deployed, you could simply spin up the browser and use your security tokens or whatever the security methods were and pretty quickly get online, which is exactly what happened. We've come a long way from those days when you needed to log into that remote desktop, the Citrix, right, that I'm sure we all had to do at least one point. Now to this really seamless environment that's not just seamless for the user, but also increasingly secure, right, leaving compliance departments comfortable with a notion that only a few years ago they were very, very nervous about. But I think we're finally over a lot of those hurdles.
And how important is that to make sure that the compliance team are comfortable with moving forward in this direction? I'm wondering, Paul, if we look at the trading life cycle, so from technology to the actual life cycle, are we seeing automation playing a big role at the moment? Where do you see this trend going in the future?
Yeah, no, absolutely. Kevin sort of, touched upon it. We've talked about sort of trading, automation, electronic trading. That's been an ongoing theme. But I think, it's again tied to the last year where we've had increased volatility. It's been a period of increased volatility, and there's a big return of the active manager that we've seen. So as Kevin alluded to, it's no longer about just can you automate your trading. It's that end-to-end process from sort of pre-trade investment, decision making, to order management, portfolio monitoring in real time, and execution. So whether it's automation or it's straight through processing, it's all about ensuring that your entire workflow is fully integrated, and it requires least amount of manual steps to sort of work through and quickly be responsive to any changes that you see in the marketplace. And I think that's going to continue to sort of grow. And I think it's, again, powered by capabilities such as cloud, as well as sort of, vendors making increasing investments to basically be open and interoperate with other vendors, right? And I think more and more clients are going to continue to sort of demand that. So I can see automation from sort of a pure sort of, to drive more electronification. That is going to continue, and it's going to continue at different paces across the world based on what asset classes you're trading. But I think, regardless, we are going to have this requirement for that end-to-end interoperability, and that kind of automation is going to continue to sort of grow, especially in the hedge fund space and even in the bigger space.
And speaking of vendors playing together and this type of interoperability and really just making sure that every segment plays together well, consolidating and acquiring is a way to do that. Kevin, there continues to be consolidation of vendors providing buy-side trading solutions. What do you think is driving that, and where do you see the outcomes?
Yeah, it's interesting. I think there's a cycle to that acquisitive behavior. So I've been in institutional fintech over 20 years now, which is hard to believe. And back then, in a lot of ways, there wasn't much to buy. The banks, the asset managers, they felt they had to build everything in-house. So where we've come today, there's just the technology available to be purchased and customized and integrated, as Paul points out, with your existing technology is really just amazing. And the cycle is I think a really positive one, right? There's as markets have gotten more complicated, as clients are looking to do more within a single piece of technology, right? That's sort of where the scale really benefits, right? It allows you to be able to get more and more functionality and data and market access through sort of a fewer and fewer number of vendors, which makes life, I think, a lot easier for a lot of the end users. And then putting all of those pieces together, again, allows for new ideas that maybe we wouldn't have found if those technologies were sort of operated by separate companies. Now, on the flip side, what happens when there's a lot of consolidation, it also tends to then lead to a lot of new startups, right? Because then suddenly there's fewer competitors. The market sees there are fewer competitors, and then some folks tend to say, hey, wait a second, we have an idea. We think we can do that better. And then we see innovation from the startups, and that whole cycle really starts again, right? They build up, they come up with some new ideas, and over time we see that consolidation. So it's great for progress in the market. I think in the end, the consumer absolutely wins. The technology just gets better and better, and the competition really drives the market forward.
So yep. New, fresh ideas. Oh, go ahead, Paul. Yes.
No, I was going to say, and it's interesting because obviously, like, once you acquire an entity and it's within your own house, you have room and flexibility to do a lot more to make it really one solution, right? Bring those components together. What needs to be carefully balanced is, of course, keeping things open for the customer such that they still continue to have choice. So if you're a smaller, launch fund, I'm sure they're happy to have a one-stop shop that gives you most of your workflow. As you work with bigger funds, you realize they continue to, have the budget and the bigger spending to say, no, I want best of breed. So you have to balance. We acquired AlphaDesk a few years ago. We continue to be open in the market, working with partners and competitors, but at the same time, we've done a fantastic job integrating with the rest of Refinitiv's product suites, right? So we continue to give customers that opportunity to pick what they feel best suits their needs. And I think that's the balance we need to strike with sort of consolidation. I don't expect it to, but it shouldn't go down to a set of closed systems, right? But it needs to be about how we keep that balance.
Yeah, I agree. I think that interoperability is absolutely here to stay. We've gotten so used to it, even in our personal technology lives and your phone, and how much goes on in that one device that feels like it's all tied together. People want that experience in their work environment. And yeah, absolutely, that's here to stay.
Do we see a lot of personalization? I mean, we talk about personalized experience, but if we're working with a large fund, do we see a lot of requests for customization? If so, is that something that's scalable with this sort of new model? If we're looking at a more consolidated landscape, do we continue to operate in a way where we can customize these solutions for certain companies, or do you see less customization as a result, or less requests for customization as a result of the consolidation?
Sorry, go on, Kevin.
Yeah, I mean, so no, I think we see more, and we're only going to see more, but you're right. I mean, at scale, that can become complicated. But what makes it work today, even with the size of the marketplace, is 15, 20 years ago, when that software was all locally installed, then you can end up with 50 clients, all with unique versions of that technology, all of which needed to be supported. That's what can get managed through through cloud deployed technology, through some of the sort of container platforms that are out there today to keep it all organized, where you can in fact allow clients to customize, and that the technology was built knowing it would need to be customized, and not requiring code to be changed and unique versions to be created. So it does allow you to do that at scale, and it also leaves customers feeling like, hey, I have something that's mine and not exactly what my competitor is using.
Yeah, and I was going to add that we see more and more you have hedge funds that have technologists within them that that actively, like, more and more traders know how to code in Python, right? That's no coincidence. So another strategy which we tend to employ is have open data APIs, right? So we can obviously support customization, but we also enable the customer to sort of get more unfettered access to their data from our solutions, and then they can build their custom reports off of it. So similar to the container strategy that you talked about, Kevin, but essentially having a robust set of APIs that, and then customers who have technologists who know how to easily work with those APIs, and then build what they require for each of their individual users. So I think that, and sort of it goes the same strategy around being open, and it's easier off of a cloud built platform which can provide that kind of data access.
Perfect, great. And a question from our audience asking you both to speak to algorithmic trading, algo trading versus the conventional expert-driven way of trading. So I'm going to take a little license here. So where do we see this now versus where do we see it in the future? Algo trading versus the expert-driven way of trading. Kevin, I'll let you kick that off.
Yeah, I mean, I've never felt like this is an either or. Really, what you have is, if anything, it's the skill set of the person that has changed from someone who would know how to execute a trade or an investment strategy sort of through the traditional mechanisms, whether it was over the phone or point and click, to someone now who knows how to take that same logic and put it into code to allow that to happen in a more automated fashion. So, even when we talk about, market automation and automated trading, there's still people behind that. People are writing that code. People are writing those strategies. And really, what's different is if I make up numbers, right, if we're talking about trading 100 million shares of stock, maybe that used to take 20 people on the desk. Now that same amount of trading can be handled by 3 people, but they have 17 programmers behind them that are managing that code and helping that automation to continue to work and evolve. So I don't feel like it's an either or. I think it's just a different skill set and a different way of interacting with the market that brings sort of in more developers and maybe less of those traditional trading roles.
Okay,
yeah, absolutely agree with Kevin there. I think more and more clients demand in their sort of buy-side trading solutions having the ability to do both. Having the workflow that enables them to set off trades to algos, and then on the other hand, having trades that are potentially of a different style where they needed to be managed from a high-touch desk. So I think customers continue to want to have both opportunities. Very often one might be a primary strategy and one's a secondary one, but I think, rarely do I come across where they're focused on solely one. So I think they're both here to stay, frankly.
Great, different use cases and both are needed, it sounds like. Thank you for that. So in terms of what you're most excited about when you're talking with customers today, Paul, what excites you the most in speaking with customers? What new ideas, what new concepts, what new thoughts are you hearing that you're looking forward to implementing?
Well, to be honest, what I'm most excited about is eventually getting to meet customers face to face, which I hope happens this year. And I'm sure most of us can agree with that. I think I am keen to understand about how their operation models are going to continue to change. I think we have seen this rapid shift to remote working. It's an open question. How much of it is it going to stay? Obviously, we're not going to go back to how things were back in 2018. But what does that hybrid model look going forward? We have some exciting things that we want to work with our customers on, such as improving, mobile capabilities, to sort of shift that workflow that is cloud-based and on their desktop to a mobile device, such as a cell phone, a smartphone or a tablet. As people start, even if remote working continues, we expect people will start to meet with customers, meet with investors. And we think mobile is going to start playing a bigger factor there. So that's one of the exciting aspects that I'm interested to discuss with our customers. And yeah, meaning eventually get a beer with a customer would be great. It's been maybe about a year and a half at this point. So
yeah, I echo those sentiments, and I hope that memories are not short, and that people remember sort of the different work-life balance that they've built over the last year, and we can maintain that at least to some level in the hybrid world, right, where we still make sure we're taking that time to focus and have some flexibility to still get the work done. And then thinking, from a technology and from a market perspective, there's so much going on, and I love that our conversations with customers now are much more so, if not completely, about moving forward, business as usual. What's next? How do we build? How do we grow? What's the opportunity? Whereas last year it was a lot more about, hey, what the heck is going on, and how is this going to evolve, and what does this mean? So that innovative spirit is fully back intact. I think all of the conversations around digital assets and all of that, fascinating, maybe not as immediately disruptive to the market as some people hope it would be, but certainly starting some really interesting conversations and good food for thought. To see all of our work and to see the markets in general continue to evolve. Should be an exciting couple of years coming.
Great conversation. I mean, in terms of evolution of the markets, pre-trade analytics, post-trade, clearing, settlement, reconciliation, we see people doing this remotely, different locations. And the more this is done remotely and in different locations, the more really automation gains in terms of importance to us, the more important, more we cast that in an important light. Trading technologies, even in less liquid markets, we're seeing that as being something that we're taking into consideration and even automating that process. Market infrastructure, different market infrastructure is needed for different asset classes, and we talked about that. The cloud technology seems to be dominant in terms of the solution space. It's secure, it's resilient, and it's built for remote access, so built for such a time as this. Cloud can really help a customer to scale up and also has a lighter footprint. And we can continue to see more access to power storage, access to compute and power storage with the cloud. Also, customers are looking for a workflow that's integrated, powered by capabilities like the cloud. And clients are also looking for a single technology. So consolidation of vendors is really allowing this. Also, that consolidation is making a landscape where we see fewer competitors and more startups. So more capabilities as we continue to engage with remote work and continue to engage with customers, and in the future, see customers and investors even more. Thank you for such amazing food for thought, Kevin McPartland, Head of Research, Market Structure, and Technology at Coalition Greenwich, and Paul Palackel, Head of Buy-Side Order Management Solutions at London Stock Exchange Group.
Great. Thank you for having me.
Thanks so much.
And as always, thank you so very much to our fantastic audience. If you enjoyed today's episode and would like to participate in the upcoming survey with Refinitiv and Coalition Greenwich, you can email Kevin McPartland directly using the address on the screen now and in your comments to register your interest. Thank you so much for joining us, and be well.